Darwin Platform Group of Companies is one of the fastest growing diversified Indian conglomerates with global footprints. It is setting up offices globally and tying up with companies across the globe from multiple sectors. The company has ventured into real estate and construction, stockbroking and finance, arms and ammunition, mining, airlines and many other sectors.
A very warm welcome to you all on Markets Today. What a fantastic day it has been. Prime Minister Narendra Modi is headed towards Mumbai, the financial capital, and the markets are getting ready for him, welcoming him with a record high on the Nifty as well as the Sensex. The Nifty actually intraday climbed above 21,900, at the moment 227 points higher at 21,874. And this very strong rally has come on the back of a fantastic set of earnings from Infosys and TCS, which the market has appreciated very well. Infosys, the top gainer as far as the Nifty is concerned, 7.74% higher, 1609. TCS almost 4% higher, 3883. Both these counters had opened with a gap, as also did the Nifty, but very strong buying setups happening across the IT space. If you look at the Nifty IT index, it's up a whopping 5%, 1754 points higher at 36,487. And when you look at how the index has shaped up, out of the 235 points that it is up, Infosys has contributed 106 points, TCS has contributed 38 points, ICICI, L&T and Reliance have contributed 22, 19 and 18 points respectively. We won't be spending much time on looking at market across the board, but the rally is very strong, very sharp and accompanied by very high volumes, as is visible in the volume setup when you look at how the NSE 500 is stacked up in terms of the most active counters. Of course, Infosys 33,900 crores worth of transactions happening. TCS about 2,388 crores worth of transactions happening, and it's the entire railway pack that has come up in limelight. IRFC 2,072 crores worth of transactions happening, counter up 113.20. Without much further delay, we'll get Osho Krishan as our guest today, Research Analyst on the technical side for Angel One Broking. A very warm welcome and good afternoon to you, Osho. What a day has it turned out to be. End of the week, since December 28th, the Nifty was in a sideways band, and it took earnings from Infosys and TCS to see this kind of a move. What do you think about the Nifty and what are you looking at?
Very good afternoon, Shail. Well, yes, undoubtedly the market has seen a very strong movement in today's session, and the whole week it has been a very lackluster week where we were hinted initially that we might witness some kind of correction in the coming future. But looking at the opening that we have seen because of the IT giants, absolutely there has seen a strong breakout on the higher zone, the 21,800, which was the crucial resistance for Nifty that has been taken care by the bulls in a very drastic manner, in a decisive manner. So from here onwards, if we will be looking at the recent developments in the markets, then a lot of companies, one should not forget to mention about the IT giants. The major IT companies have seen a strong rally. The whole index is approximately 5% higher. So they have given a strong boost to the market, which has rallied, which can be seen with the rally of Nifty above 21,800 levels. On this spot, even it has tested the 21,900 zone also. So that means from here onwards, one can definitely look for a 22,000 kind of a target in the coming week. Overall, the sentiment have turned very much bullish. If we will be talking about the major private sector banks and even some selective PSU banks, they have also contributed in today's rally. Majority positive movement has been seen from ICICI Bank. And obviously the oil and gas sector has been one of the leading performers throughout past 2 to 3 trading sessions. So Reliance, ONGCs, one should not even sidelines these companies because they have contributed a lot for the whole week. And today, again, Reliance was also up. ONGC have given a very drastic up move. So there has been all positive movement that can be seen in today's session, which has contributed a lot to the up movement in the Nifty index.
Okay. A fair point that Osho makes is that a lot of public sector banks have participated in this fantastic run up. Of course, we've touched upon the IT space, but I'd just like to mark the Nifty PSU banking index. We've seen a whole host of private and public sector banks performing. The PSU banking index at 5856 is up 2.7%. At this moment, all 10 stocks making up this index are in the green, and that's wonderful when you look at the kind of moves that you've seen in counters such as Punjab National Bank, in Bank of India, in Union Bank. They are accompanied by a sharp surge in trading volume. If you look at the volume buzzers, Union Bank at 4 crore shares is not only up 5.4% at 131, this is about 3.6 times its 5-day trading average. Maharashtra Bank 4830, 5% higher, 3x volumes with 7.23 crore shares traded. Osho, when you look at the PSU banking sector, what are the names that come to your mind? Anything that catches your fancy on the long side, which might give supernormal returns in January's FNO expiry?
See, firstly, the first company which have seen a breakout and again retested the neckline of the breakout is Canara Bank. If we will be talking about Canara Bank, at the starting of the year on 3rd January, it has given a breakout. After that, it has sustained on the higher levels, but in the last 2 to 3 trading sessions, the counter have retested the breakout zone. And again, once again, we are witnessing a strong up move. So that means it is hovering in the cycle of higher highs, higher lows, maintaining the higher lows on a very decisive manner. So Canara Bank from here onwards is looking very positive, and one can definitely track, or one can definitely see a target of nearly 475 in the near term. Also, apart from Canara Bank is PNB. PNB is gaining a lot of traction because if we will be talking about the levels front, it is very close to enter the 3-digit number. So we are expecting that the time it enters 100 zone, from there onwards we can see a rally towards the zone of 108 on a immediate basis. Above all these counters, there is a small cap company like Maharashtra Bank that is also witnessing a very strong traction, and one should definitely not sideline the counter. We are witnessing a strong breakout in this counter, and one can definitely expect an immediate target of 52 followed by 55 in the coming futures.
Okay, so as I had said, it's the public sector banks that are occupying not only the traders screen at the moment, but also they are creating a lot of long-term very good charts when it comes to monthly and weekly breakouts. We've touched upon IT, we've touched upon the banking space. Let's look at some other stocks where you see fairly strong traction coming in. The railway pack, Osho has come up again with a lot of winners today. Strong moves that you can make out coming into IRFC, RVNL, IRCTC, IRCON as well to some extent. Do you have a favorite on this space?
See, overall, the whole counter is looking very positive. If we'll be looking at the recent developments in the last 2 weeks, there has been very strong up movement. Firstly, if I'll be talking about IRCON, IRCON is in the cycle of higher highs, higher lows. It is very much near to the target of entering 200 odd zone. So it is looking very positive. The 21-day exponential moving average is giving a very strong support to this counter. So any dip towards the zone of 190.92 should be acting as a very strong support zone, and 200 should be the first target that one can expect in this counter. The other one, IRCTC, is also looking very positive. The time it has given a breakout from the zone of 900, it has consolidated there. It has after that it has witnessed some kind of gradual up movement, but definitely it is looking very positive for a higher target of approximately 980 in the coming time. So one should definitely look to gauge these kind of momentum in these counters, specifically during this period when the market is ultra bullish. And on the downside, if I'll be talking about, then the support is lying around the zone of 920. So any dip towards 930, 920 should be auguring well. On the higher end, 980 is the target that one can expect in IRCTC.
Okay. One stock to look out as far as third quarter earnings is concerned, after those numbers have been declared by Infosys and TCS, is HCL Technologies. It's already broken out into a fresh record high. Earnings are today evening, if not late night. 1541, already up 4%, and the move is backed by substantial volumes of somewhere like 54.8 lakh shares. We'll turn to Osho for his skills on reading the charts. Osho, a first day of fairly strong moves above the previous record high, although the counter has been in momentum over the last 5-7 trading sessions. What would be your medium-term outlook on HCL Technologies?
See, overall, this counter today have seen a very strong breakout from the zone of 1500, and obviously the undertone was very positive in the overall IT sector. So because of that, because of sentimental positive movement, it has given a very strong breakout. But if we'll be talking about the recent development or the development in the past 2 to 3 months, then it has been hovering in the cycle of higher highs. So that means from here onwards also the inherent strength can be seen in HCL Tech. Again, it will be a very subjective saying, because the result is yet to come. But once, as looking at the trend, one should definitely expect that it should be on the positive grounds, even not on the downside. 1480, 1500 should be acting as a support, and on the higher end, on immediate basis, 1565 is the target, but obviously we can expect some volatility in the counter. So even on the higher end, 1518, 1600 should be the next potential target that one can look in HCL Tech.
Okay, it's the turn of the Nifty now in the cash markets above 21,905. It's almost a certainty that the index will now close in a different digit, which I mean above 21,900, and that 22,000 is now within shouting distance for the Nifty. What does that mean for the market on a broader sense? Well, essentially you will see third quarter earnings now driving enthusiasm for bulls. If you see the longer term chart of the Nifty, the index had entered a consolidation phase from December of 28, and till about yesterday evening it was trading in a 400 point range. As Osho puts it really well, it opened gap up today, and from then it went into a trending orbit, which essentially means that successive 15-minute candles have been better and better and are trending up. Let's see where the close is. But one thing I wanted to mention was the HCL Tech stock. If you remember and you were with us in the morning show, we had marked the 1500 call for HCL Tech expiring on 25th of Jan, somewhere in the vicinity of 38-39 rupees. Well, that one has surged over the last 5, 7, 10 minutes and is now trading at 58.75. Would you, Osho, have a view on this option call, 1500 Nifty HCL Tech call expiring January 25th?
See, again, 1500 is very in the money, so there will be a lot of movement that can be seen. So it's advisable not to take a very naked or vanilla options in HCL Tech as of now. One can obviously expect some kind of volatility in the coming times. So one should definitely look for a strategy like a straddle. One can do long straddle. One can do. So it's not key. One should definitely look for 1500 call option. It's at 60 levels as of now, so there can be a lot of volatility or movement that can be seen. So better to avoid, if one is not having or wants to have a fresh position, better to avoid and look for a strategy of long straddle at the money strikes of 1540 call and put options, which is trading approximately around 35-36 levels.
Okay, let's just shift our attention to the F&O space and look at where the market is moving apart from tech. Well, it's really interesting at this point of time to look at active futures. There is no surprise here. Infosys and TCS, of course, are the top traded counters. But you have a fairly decent uptick coming on Coforge. Coming to you, Osho, this counter has also all the characteristics of a high beta space. Would you sort of stick your neck out on Coforge? 66.16 in futures, up 5.7%.
See, Coforge undoubtedly is looking very positive as of now, and it is one of the preferred pick on the mid-cap ITs. If I'll be talking about the technical setup, then yes, today it has given a breakout around the zone of 6,400. And if we will be talking about the setup on which it has given a breakout, so approximately 150 to 200 kind of a target one can expect. So on higher end, 6650, 6700 is the target that one can expect on a positional basis. That is 1 to 2 trading sessions. We can expect a target of 6550 followed by 6700. Overall, it is looking very positive. And if we will be talking on the technical parameters, this counter have seen a decent price wise and time wise correction phase in the last 1 month kind of a time frame from 15th of December till now. And today it has given a breakout. So obviously from here onwards, we can expect the rally to continue, and it should give a very positive momentum for the even fresh buyers also.
Okay. Now there is something interesting stock I want to point out. Remember, when you look at the top price gainers in the FNO space, would you believe it that in the first 10, in the first 12, 11 stocks are from the IT space. There is one lone outperformer, and that, ladies and gentlemen, is ONGC, up about 5.6%. This is something to be really looked into. 3 days of a downtick, but the rally now is getting better and better. Osho, what are ONGC's charts telling you? We've seen a breakout today which makes it at the highest level since May of 2015. So that's 5 plus 3, 8, almost a 7.5-year high. What is it telling you?
See, overall, initially the first target for ONGC was something around 220, 222 odd levels, which it has already tested on 9th of Jan. And from there onwards, it has seen some kind of correction. Again, it is hovering around the same levels. So we need to review, because even if I'll be talking on the technical front, it is getting a very strong support from the 21 exponential moving average. So even on the 10th of January, it was hovering just above 21 exponential moving average, and that is the low through which one has being bought in this counter. So from here onwards, again, there will be some upside potential in this counter, but one should better wait for some kind of zone of 215 to 16. The immediate target comes around 228 and 32. 228 to 232 is the next immediate target that one can expect, but better to wait for some kind of correction, because such kind of positive move in ONGC is very drastic, and after a movement of approximately 6%, some kind of correction can be expected. Correction as in terms of profit booking can be seen. So one should wait towards the zone of 215 and then can accumulate for the target of 228 and 32.
Okay, ladies and gentlemen, with that, we'll draw to a close today. I'll just read out what has been a fantastic day. The Nifty shutting shop around 21,900, 270 points higher. There's a massive breakout on Nifty IT index, a gap up and then a 5.2% rise, 1836 points higher, 36,570. It is a day that belongs to India's IT sector after two top companies, TCS and Infosys, reported earnings yesterday that were very well accepted by the market. The Nifty is closing at a record high. The Sensex is closing at a record high. The Nifty IT index is at least a 2.5 year high, and we are seeing blowout trades happening in the PSU banking sector, in the railway space, as also in all mid-cap IT companies. Most likely, we'll see a fresh move coming in on Monday. Thank you so much for joining us.
Darwin Platform Group of Companies is one of the fastest growing diversified Indian conglomerates with global footprints. It is setting up offices globally and tying up with companies across the globe from multiple sectors. The company has ventured into real estate and construction, stockbroking and finance, arms and ammunition, mining, airlines, and many other sectors.
In today's rapidly evolving business environment, when risk is omnipresent, managing risks is no longer just about ticking a few boxes. Businesses need to maintain a panoramic view of risks to stay ahead of the curve. Join us to explore how organizations can rethink risk to unlock new possibilities and become fit for future. At PwC presents De-Risking the Future in collaboration with Business Today.
Step into the future at the World Economic Forum at Davos 2024. 5 days of continuous coverage with top Indian and global leaders. Join an exclusive lineup of visionaries, CEOs, and policymakers. From dialogues on climate change to economy to artificial intelligence. Experience the transformative conversations at Davos. Business Today Davos, powered by Motwani Jadeja Foundation, conglomerate partner Darwin.
Hello and welcome to Market Today. I'm Siddharth Zirabi, and with me to discuss the third quarter performance is N. Ganapathy Subramaniam, the Chief Operating Officer and Executive Director